All right, folks, welcome to this evening's Q&A open house with the market guys. I'm AJ Monty, and on the chart here you see SNTA, which is Syntha Pharmaceuticals Corp. Just last week I put an alert out to buy into this stock, and you can see that we're already up on the price. And I just want to talk about this one first and then move on to the general market so you can see what's going on with the major indices. This is the area of role reversal that I looked at when the alert first went out. I do believe that the buy price was 243, if I'm not mistaken. I don't have the alert up in front of me, but 243 was the buy price. So we're up about 11 cents from that buy price, and this area right here was the stop that I put in, because it was only a $2 stop, a 20-cent stop that we were putting in. I wanted to keep the stop very tight because a lot of times with the cheaper stocks, they can be more or less manipulated very quickly with one or two or three institutions coming in to hit the price. So, you know, a lot of times when you're trading the cheaper stocks, you have to keep the really tight stops in. So this was the area where I said to put the stop. Now, if I zoom in a little bit further, looking at the daily chart, I want you to look at this area right here, which is right around the 260 level. I'm going to add this to my analysis of this stock so you can see that this is the first level of resistance that we would hit. And although the volume is going up, you want to keep your eye on this level. Here's why. If we break over that level of resistance right around 260 to 261, then you're going to move your stop from 223 up to right under that support level. So let's say 253. So you'll move your stop up if the stock breaks out over this level, and you'll continue to hold the position and be able to lock in your profit. Isn't that nice when that happens? You buy it at 243, stock goes up, you raise the stop to 253 or 255, and you're locking in about 10-cent profit on a $2.43 trade. Now, the trailing stop strategy is not very complex. It's basically you're raising your exit price as the stock goes up. So you're following or trailing the stock price as it goes higher. Now, here's the key or critical point. If the stock hits the 261 level and then you see a drop in volume here, even though there's still a chance for the stock to go higher, it's best that you take your profit on the drop in volume, especially if the drop in volume takes place on a red candle anywhere below that resistance area. Because if you see the drop in volume, that's a signal that the buyers are starting to lose some of their steam. Okay? And if the buyers are losing momentum, you want to absolutely take your profit and go with that. Here is the bullish engulfing pattern, followed by another bullish engulfing pattern, followed by green candles that are long green candles on higher volume. So any kind of a drop in volume is telling us that the short-term traders are starting to get out or get concerned, and they're about to pull the trigger. So why not take your profit and run? Now, let's play this out, because this is really important. This is basic trading. And for the investors out there that are listening to me, you would do something very similar, except your time frame would be a longer time frame. You're not trading in days. You'd be trading in weeks or even months, and you're reading the signals the same exact way. So let's play this whole thing out. Let's assume that the stock goes to the resistance and pulls back. Remember, you're going to start to get out. And if the stock then makes a move and breaks out here and goes higher on higher volume, go back in. It's really okay to do that. The only thing you're going to sacrifice is a very small window here, and it's okay for you to buy back at a higher price than you sold because you're already locking a profit on the first trade, and you're treating this as a brand new trade moving forward with a new entry point above resistance. And why is that important? Because former resistance broken now turns into support, and then you have a whole new role reversal pattern that's forming that's going to allow you to trade it. So if you get in here or get in here, you then place your stop right below that new support level and do this whole thing all over again. It's a fun stock to trade. We've traded it in the past, and the good thing is we have never lost money on this one, and I certainly don't want this to be the first time we're losing money, although that can happen. It absolutely can happen. We just have to protect ourselves. In the event that that does happen, we're only going to lose 20 cents per share on that trade. Okay, now if there's any questions on that, type them in now, and I could revisit your questions after I go through the major market analysis here. Okay, so we're good. We have a little bit of a time delay on that on the Q&A box, so bear with me if I don't pick up your question right away. We have a good audience today, and remember, right now, as you hear my voice, it is it's your opportunity to ask me questions and make your comments. Of course, we are recording this, and there are some people, especially Lena out there in Finland, who's in a different time zone as we are. Lena today asked me if we can send her the recording because her obvious time difference doesn't allow her to stay awake at this point at 2 o'clock in the morning or 3 o'clock in the morning, whatever her time zone is. I would agree with her that it would be best for her to listen to the recording. So it is an advantage to listen to the recording for some folks. Okay, now let's look at the diamonds. I put out a market report last Saturday. Bill, actually, I do those market reports on Friday as an added value bonus. And Bill, my partner, mails that out either Friday evening or Saturday morning. And I have to tell you that if you're not going week to week and building on the previous weekly alert, you're not getting the full value. What I mean by that is for the past months now, these weekly market reports have been just incredibly accurate. And I would love to be able to say it's in my ability to foresee the future, but that's not really what's happening. I just happen to have a lot of experience in reading charts, and the markets are trading very, very much in line with the technical signals. And notice that each week I draw these lines so that you can see in the following week what I talked about in the previous week. I don't want to confuse things here, but this is just the record of what I talk about. This diagonal line is what I posted last Saturday from the information that I got on the close from Friday. And we identified this as resistance, and I said that there's a good chance we'll start to pull back this week, which we're currently in now. Look at what happened today. Now remember, the alert went out here, right? The alert was recorded on the 19th, it went out the 20th. Lo and behold, what do we have on the very first day of the new trading week? Can anyone tell me what that candle pattern is and perhaps what that candle pattern represents? Who wants to take a stab at that? Okay, Larry, you're right. I don't know if everyone's seeing the answers that are coming up, but Larry, you're right. Gene, you're right. It's a doji slash, I would even call it a very small bodied, we can call that a spinning top. Ann says doji indecision. Larry says reversal. Gene says indecision. You're all right. Look at how similar today's pattern is from the pattern that we got back on June 9th right here. Oh, I just got a spinning beach ball. I hate when that happens. It means my computer's getting overloaded. But look at that. There's a spinning top slash doji. There's a doji. Here's a doji. Here's a hammer, a small-bodied candle. Notice the repetition of the dojis, look at this, and the spinning tops here and here. You see what I'm talking about with how accurate the markets are? It's gotten so predictable that I have to actually prepare people to protect, because when the market becomes so predictable, you start to feel invincible, don't you? And then when you start to feel invincible or even overconfident, what happens? You start to take unnecessary risk, and then you start to make mistakes because you're riding your losses. We have to treat every single trade as though that's the trade we're going to lose money on. Seriously, I know that's not the most optimistic way to look at things, but you have to understand, if you're right 80+% of the time, you have to understand that you're going to be wrong about 20% of the time. So we have to prepare for that. Now, again, today's spinning top / doji is the perfect beginning of what I would see as the new downward leg. So again, tomorrow I would not be surprised if we see a lower or down day. And I wouldn't be surprised if the days that follow lead us right back down to support. Okay, so that's the diamonds. Let's look at a more broad-based index, which is the S&P 500. The Dow is a small sliver of stocks, and the S&P is a more broader-based index. And what do we see? Again, doji. Now, you have to understand, folks, for two separate markets to be showing similar signals is not a coincidence. It's a pattern. And here again is my diagonal line that I drew from last week. And notice, although today in the S&P it was up, it's on lower volume. Now, what does that tell us? Come on. Those of you who have been following the market guys long enough know what lower volume is. Larry already pointed that out in his comments. And what does the lower volume mean when you see a higher price on lower volume? Go ahead, take a stab at it. Exactly. Amalia says buyers are losing interest. That's exactly right. And if the buyers are losing interest, the sellers are going to start to take action. Sophie also says the buyers are getting tired. Yeah, thank you. You're basically repeating the language that I talk about all the time, which tells me that you're all getting this. That's what's so exciting about this. If I can continue to teach and do it in a way that's repetitious, don't get bored by that. Repetition is sometimes the best teacher. And you'll find that the repetition in the signals are going to, again, add to your level of confidence, and from there you'll be able to continue to trade. So again, through repetition. Let's go back and look at the spiders to see what has happened in the past when dojis or spinning tops show up. Let's go to the left of the chart. What is that? Spinning top, doji, boom, it went lower. What's this right here? Doji, what happened? It went lower. What's happening up here? Spinning top, bullish engulfing pattern up. We got faked out, but then the next day, doji, right back down. Doji at the bottom. You see that? Look at all the dojis. Look at the spinning top here at the bottom. Look at the spinning top here before the rally. See, repetition all over the place. So I drew my ascending trend line here. I put resistance up here, but I put my forecast line here. The diagonal line, I think we could still pull back. Okay, so that's the spiders. I'm monitoring the Q&A box. I don't see any new comments, but I do welcome them. Go right ahead when you feel free. Type in. Okay, now let's look at a more broad-based index in the Russell 2000. Now here's 2,000 stocks that are being monitored in an index. And what happened today? Interesting, although it is above the resistance line that I drew, it is still a spinning top. And I'm going to still hold this line. I'm still going to hold that line because although the Russell 2000 doesn't show, it doesn't show volume, it's still a small bodied candle, and we still have a lot of time left in the week. this was all economic news that drove the markets higher, but as you'll see, as it plays out, a lot of times it's a knee-jerk reaction to what might be positive, a positive perception of what's going on. I'm going to get to that in a little bit as well. Let's go to QQQ, power shares. This is a power shares. This represents the NASDAQ market, and boom, look what happened. Doji, another doji. So 3 out of the 4 major indices are showing dojis on lower volume. Not a coincidence. In fact, the odds of that happening are almost astronomical if you were saying that this was all random walk theory, that this was by chance. It's not by chance. This is a footprint that is being left that is very, very obvious. In fact, look at today. Remember, that horizontal line that I drew here was drawn last week. I said, okay, start here. We're going to connect some highs. I connected a high here to this spinning top, projected out, and look at today's high. Today's high matched perfectly with the horizontal line that I drew last week. And what I think is going to happen is we'll pull back, eventually testing support. I think we'll see a little bit of a bounce down here. And the only reason I added a bounce feature or bounce forecast to the NASDAQ market is because in the summertime, we go through what's called the summer doldrums. This is a cycle where the NASDAQ market especially kind of lays sideways and goes into trading channels. We see that for many, many years. If you look back in history, the NASDAQ market lays flat and trades in trading ranges. So the reason I thought that we would bounce is because down here you could also see some areas of support, and right here was kind of like the median intersection between this support and this trend line. So I drew my bounce over here. Again, on lower volume, that's about 25, almost 30% the volume, a volume drop from last Friday. Now Larry made an interesting comment. He basically put in triple top, question mark. Yeah, Larry, a triple top could very well form, and a triple top would very much be related to akin to a head and shoulders pattern. So if you look at the weekly chart, especially on the Qs, again, this still looks like a major uptrend, and I would say yes, that is still a major uptrend in place. But the daily chart is showing more of a sign of a triple top forming. Now, the triple top would be completed when this trend line is broken. That would be the equivalent of the neckline for a head and shoulders. Now, for those of you who are novice investors or novice traders, I wouldn't be too concerned if you're not getting this point with me. We have videos on the Market Guys website that can teach you more about the language that I'm using right now, and you can learn from that. Now, if this pulls back like I expect it does, and it breaks down below this trend line here, that's when you would start to take short positions. Now, Dylan says, at what point would you say an engulfing pattern has failed or will fail? Well, whether it be a bullish or bearish engulfing pattern, if it's a bullish engulfing pattern and it goes lower, then that's a failed pattern. If it's a bearish engulfing pattern and it goes higher, well, that's the opposite of what we would expect, and that too would be a failed pattern. But right now, don't be too concerned about completing engulfing patterns or trying to read too far into the signals. Price and volume are what you should be sticking with right now, because volume especially is a leading indicator. That's what's giving me all the signals. I look at volume, and then I compare the price to where the stock is relative to support or resistance, and I go from there. Okay, finally, let's go to the VIX. Now, the VIX is, in my opinion, the best or most accurate leading indicator that you can find outside of volume. And here is obviously the VIX. I have my trading channel in place. I have my forecasted short-term trend, we call that a leg, in place, and I think that the VIX could start moving up from here, especially with today, with the low for the VIX completely filling this gap. Let me zoom in here so you can see that. And I'm going to put a test question out there. for those who have been around for a little while. Now, I had to move. For some reason, I got things in the way here. Okay, see this? See this candle pattern right here? That high happened to be the opening of the day. Let me draw my price level. I'm going to draw my price level right at that high. Okay, and you can see that we came within about a penny of that gap completely filling. So tomorrow in the opening, VIX might go down a little bit. Look for that gap to completely fill. The reason I think it could open up lower is because the markets could open up higher. That would push the VIX lower and vice versa. So I would expect that to completely fill. And if it does, let's say the VIX opens lower and then goes up from there, you could actually wind up with a bullish engulfing pattern on the VIX. Because if we open lower tomorrow on the VIX and then the VIX closes higher, that is how bullish engulfing patterns are formed. So it's not what happens today, it's what's going to happen tomorrow. Will we or will we not have a bullish engulfing pattern? I hope the VIX opens lower and the market opens higher, because I don't like to see unopened gaps. Once that gap fills, then it clears the way for higher prices, and then there's minor gaps above the market as well that we have to look for on the VIX. Now again, for the brand new person who's watching and following along with us, we have videos that will, again, show you what gap trading is. It'll show you how to draw support and resistance, what role reversal is, and again, we still have more people joining in, maybe a little bit late here, but better late than never. We have a lot of people joining in. So just follow along with the market, guys. We have a lot of good things coming out. In fact, Bill and I have completed an investor IQ test. We can call it a quiz because it's only 10 questions. And the questions were designed to score in such a way that will let us know what level you're at, so that once we know what level you're at with regard to your knowledge base, then Bill and I can develop educational content that will help us help you fill the gaps. No pun intended there, but to fill the voids and where you could use some more education. And we're really excited about that because no one is doing what we're doing, and we're going to keep improving on our services. Okay, question from Steve: does pre-market and aftermarket activity factor into filling gaps? No, Steve. These particular charts only record from the opening of the market during regular hours to the close. You can customize your charts to include intraday or pre-market, aftermarket hours, and here's how you would do that. You do that on the daily intraday charts, and you can see here that in the pre-market activity, see in today's market, actually let me go to the diamonds. I have to go back, actually I go to the SPY because I don't want to confuse everyone with the VIX all the time. Okay, so here's the spiders, and you can see the gray areas are the areas here are what separates the time frames. So again, I go to intraday, and you can see that after 4 o'clock, you see right here, after 4 o'clock today, see down 16, they measure that in military time, by the way. After 1600, the S&P went up. Now that's perfect. Now I didn't see this until now, but now if the S&P goes up in aftermarket hours, that means that the VIX could open up lower tomorrow, which is exactly what we want in order for the VIX to completely fill the gap. But what's happening in after-hour market doesn't necessarily mean that that will follow through in the following trading day. In fact, on the contrary, a lot of times the institutions are pushing the markets around after hours because they can. It's a more thinly traded market, and it would take less money for them to push prices around. Now, even in the after-hour market, we still hit an intraday resistance area from right around, what time was that? That was right around 3 o'clock today. So again, this is very interesting how after-hour market plays into the equation. Thank you, Steve, for that. I appreciate that. Okay, let's talk about one more thing. I want to talk about the dollar, because today, let me get into a daily chart. I want to talk about something that is really being overlooked by, I would have to say, 90% of the general population, whether you're an investor or just a citizen who is, trying to make ends meet in a fairly tough economy. I want people to understand that that word manipulation is something that I use very carefully, and I take it very seriously as well. Folks, let's not be so naive to think that, oh, the world is perfect and everyone in the markets or economy are doing the upright, honest thing all the time. Listen, in politics, you know as well as I do, it doesn't matter what political party you're affiliated with, there's a lot of dirt that gets thrown around. The first thing people are going to do to a candidate, whether they'll be a local candidate or a presidential candidate, is look for the dirt. They're going to look for the dirt. They're going to sling that around. The mud is going to be flying because they're going to try to manipulate the opinion of the voter. Now, what does this have to do with investing? Well, when it comes to big money, the numbers are manipulated all of the time. And I think you're all smart enough to know that unemployment numbers, as they are reported, is not a real number. Please, look at the numbers yourself. Unemployment versus those who are actually in the workforce are two different numbers. If you are on the unemployment rolls, that is a temporary statistic. And eventually, if you were to file for unemployment, you would eventually be off unemployment. Your benefits run out. Does that mean you got a job? No. But the way the numbers are being manipulated and the way the markets have been reacting lately is that when unemployment numbers are down, people are seeing that as bullish. And it's not really. Don't be fooled. That's number one. Number two, when it comes to money supply, I want you to look at this. Now, I tried finding some charts, okay? And I want you to look at some of these charts here. I'm going to pull them up randomly, all right? Because some of these charts are way outdated, like this one here. This is a report of the money supply, but it dates back to 2009. And believe me, I can find more current ones. But what happens is when someone makes a chart of the money supply, they leave it up there, and some of these are outdated. But I want you to look what happened from the 1970s to 1980s till now, just right up into 2009. Now, as I look at more current market numbers. These are old ones again. I'm trying to look for. Here's 2011. That's Iranian. Now I got to be careful. United States money supply is 2012. As you look, let me go back to this one. As you look at the most current money supply figures, these numbers are still going vertical. In other words, the amount of money that's in circulation. Oh, isn't this interesting? That title is pretty fascinating. Can banks create money out of thin air? Well, the Federal Reserve can. And what's happening is the estimated global currency in circulation is at record highs. And what that means is that the Federal Reserve is still printing money. They're still printing money. Let me see if I can find a money supply graph here on the images. I typed in images. Hopefully that kept it there. Oh, it brought me to you might want to do this on your own. Just go to Google Images and type in money supply and watch what happens. You could go curve, or hey, let's go to the money supply curve. Let's look at this one. you can see that it measures the different money supply. I like the graph better, actually. I don't want to hop around and confuse you, but I like the graphs better because it shows time frame next to it. Okay, here's another one. Here's one that's showing the U.S. money supply based on, and this is pretty accurate, looking at how U.S. versus other currencies are affecting gold prices. Now, gold prices have dropped recently, but the money supply is starting to go up. Now, let's test the audience. If the market or the Federal Reserve floods our economy with paper money, what does that do to the actual value of that currency? Who has been on top of the economic news to, okay, Lloyd, you're right. I'm going to wait for some other answers to roll in. Charles, you're right. Sophie, you're right. Gene, Ann, Nathan, Larry, you're all right. As the Federal Reserve prints more paper money, it devalues the actual dollar. So, in turn, it causes us to have to spend more money to get the same value for whatever product is out there. Now, I don't know if you've been all watching the price of eggs, simple eggs that you buy at the grocery store, but I want you to watch and track. Next time you're at the store, the supermarket, I want you to write down the current price of a dozen eggs and just watch what happens over the next month. Over a 30-day period, you're going to be blown away. Now, here's what's happening with eggs. There is a shortage of eggs, believe it or not. And so now you have inflation combined with a lack of supply in eggs. That's going to cause the price of eggs to go up. That's called food inflation. Now, follow me here, because there's ways to make money by analyzing the markets this way. This is where I get really excited. You can make a lot of money if you think in these very simplistic ways. What types of foods have eggs in them? No, you don't have to write that down. Just think about it. Well, baked goods, right? We have processed foods. We have prepared meals. We have powdered eggs. We have a lot of the dairy products that are condensed or powdered or preserved or freeze-dried or dehydrated. All of those things, Sophie put practically everything has eggs in it. Every bit of those items are going to be affected by the price of eggs going up. Now, is that inflationary? Yes, it is. Food is the most consumable product outside of commodity that we have, being air and water. It is the most consumable. So what's going to happen is the American and the Canadian and anyone else listening to my voice right now is going to have to work a little bit harder to make more of those dollars to be able to survive. Okay, that's the doom and gloom. How can we as investors make money? Well, here's a symbol I want to give you, and then I'm going to start analyzing your stocks. This is a corn fund. A corn fund. When the price of eggs go up, all commodities rise. Because now we have to find other food sources to make up for the most expensive. Now, corn right now, corn, mind you, feeds the cattle. Cattle is another form or a supply of protein outside of eggs. Can anyone tell me the candle pattern that we see today? Very, very close to a bullish engulfing pattern, isn't that? Corn. Now, look at the volume. We have a big green candle that has filled the gap today, a big green candle on high volume with gaps above the market. You see that? We have a gap target up here. Now, if you were to buy CORN, and I'm giving you this as a freebie and as an educational example as well, look at what I'm doing here. Look, if I think that corn in the form of this fund can go up, I'm going to start with this low, I'm going to connect to that low, project out to that low, and go even further. You see this? what is the chance that that trend line could hold? There's a very good chance that that new diagonal trend line can hold. That's a beautiful 45-degree angle. I got a great price target up here around 24.20. That would give me a 4% return in what could be a matter of weeks, certainly not months upon months upon months, but 4% is 4%. How many of you are getting 4% or more on an annual return on investment on your cash? See, so what we do is we leave that in place. Now let's look at the weekly chart. You see that? Isn't that a beautiful double bottom forming down here? See that? See that double bottom? Beautiful, right? So I just gave you an idea on a very inexpensive investment. And for those of you, by the way, who are option traders, there are many options that you could trade on this particular corn fund. And I've traded this one in the past. I'm using this again as an example on how we could shop for ways to make money. Now, if the Dow goes down, the commodity markets tend to separate themselves from the general indices. So this becomes a good bullish strategy in a bear market because it doesn't matter. Inflation is there. It's coming. It's going to come in a big way. And if you know how to prepare for it, you could not only offset or hedge yourself against inflation, but you will be absolutely able to make money on top of your hedge strategy. Is that exciting? It's definitely exciting for me. Paul, Paul's question was, can you buy options on corn? Yes, you can. Now, Paul, what I would do is because I know you're an option trader, I would go out and buy the long-term January in-the-money calls. And you'll notice that you could spend $23 for the stock itself, or the option traders can go down here and buy the in-the-money January 20 calls for a fraction. You could probably buy those for $4.50. So you split the middle, spend $4.50 instead of $23, and then if corn goes up 4% in price, that option price can go up. Heck, that could go up 20%. On a 4% move in the underlying stock could give you a 20% return on that option. So Paul, thanks for that, and keep track. If you get in on that one, by the way, for any of our subscribers, if you are a member of the Market Guys subscription base, listen, I'm taking a whole new position in our services. I don't want you to lose money. I want you to make money, because look what's going to happen. If you make money, especially in a stock like this, and you're happy about that, you're going to be our best advertisers. I don't have to spend money on a marketing budget. You're going to be the ones that are going to tell your friends and family about how much money you made, right? And how you're learning, and how, of course, you're going to share this with the people that are closest to you. Go out there and share it. Okay, B, A, and C. Okay, Ron is already ahead. He's reading my mind. If you want to type in some stock symbols, let's go. Rapid fire stock analysis begins now. Ron is looking for BANC, which is Bank of California. Oh, be careful of this one. Be careful of this one, Ron. I see a bullish engulfing pattern yesterday on high volume, but I don't see any follow through today. Look at that. I don't know what happened. You said you don't own it, but you were wondering if this is a buy point. I don't feel good about that drop in volume. That is the biggest one-day drop in volume since back here on what was that? I'm sorry. I'm so sorry. I'm reading that wrong. That's a weekly chart. Let me go back to the daily chart. It's only Monday. All right, that's still a big drop in volume. So here's what I would do. Forgive me for having to adjust the screen. I get this in the way. Okay, so here's what you got to do. We had a drop in volume. We did not have an increase in volume. So if you do decide to buy it, I would wait tomorrow to see if it's another green candle, and I would want to see a higher volume day. If it's not a higher volume day, then don't buy it, because what could happen is it could wind up maybe going up a little bit on lower volume just by a little blip, and it can come crashing down, and you don't want that, okay? This is a cheap stock, but remember, our general outlook for the indices is bearish for this week. So if you're buying into a bank stock specifically in a market that I think is going to drop, you could be setting yourself up to fail on that one. So be very careful of that one, Ron. Okay, PB says AMBA. Let's start off with the daily chart. AMBA, woo! I wouldn't be buying this one. Okay, PB says, ABA finding a bottom here, or does it have to be more downside before it being a buy? Here, I'm going to test you, PB, and I'm going to test the rest of our attendees as well. Number one, when the market is moving down, especially after a bearish engulfing pattern, but the volume is going up, what does that tell us about the motivation level of the sellers? It's not a trick question. It's a straight question. If the price is going down and the volume is going up, what does that tell us about the motivation level of the sellers? Gene was first to answer. Gene is right. Charles is right. Gil is right. Amelia's right. Nathan, Terry, Larry, Rick, all of you. And you're all right. It tells us that the sellers are more motivated. It's more bearish. Now, here's what I'm going to suggest you do. Okay? We're going to wait. Okay, PB, follow me out here, because this could very well be a really good buying opportunity. Now, I have not checked the fundamentals of this company, so I don't even know what they really do. I'm just analyzing this from the technical charts. I know that sounds crazy, but a lot of times I'll trade a stock without even knowing what they do, strictly on the technicals. The first thing you want to see is this. Boom. You want to see a drop in volume. That's the first signal that tells us the sellers are slowing down. Okay? Now, here's the other couple of points. Right here is a key role reversal support level with a very, very minor gap. Hard to see, but there's a very small gap between that high and that low. So this area will be a target price and a support level. That's support level number one. Support level 2 is here. Can you see where I'm going with this? So you have to wait and see the drop in volume, and then you have to wait and see how far this stock goes before it bounces. If it bounces here, you buy it. On lower volume, you buy it. If it bounces, and you put your stop right below there. If it continues to go down and bounces here on lower volume, you buy it and put your stop right below there. There you go. So I think that that's a pretty expensive stock to be trading that way, so I would be more inclined to take a bullish position on the options rather than the stock. And PB, if you're not an option trader, then start to look at that. Options gives you a lot of different choices with regard to your strategy, and it also reduces the risk. So that's what I would look for. And by the way, I'm going to leave these lines on there. There's a good chance that maybe one day that'll come up and we'll be able to record our analysis from today. Okay, and by the way, if you put in a stock symbol like Ann did with STZ, please, if you could, let me know what your intentions are. If you're thinking about buying it or you already have it. Okay, now right now, Ann, this does not look bullish to me at all. And here's why. We have what we see here as a trading channel. Now my eye has already drawn this out, but I'm going to identify that more clearly for you. There's the trading channel. Notice the stock is going up towards resistance, and what's happening to the volume? Yeah, the volume is dropping. Need me to zoom in on that? I will. There's the volume. Volume is dropping as the stock is going up. Whereas the highs are getting higher, the volume is getting lower. That tells us, opposite of what we looked at in the other stock, this is also bearish. It's telling us that the buyers are running out of momentum or steam, and we don't want to buy that one. I would actually stay away from this one. If you have it already, I would probably sell half of my position, and on any move lower, I would sell the rest. That would be my analysis if you have that one. By the way, this is not a web seminar that's hosted by anyone other than the market guys. So my only disclaimer is that, number one, this is recorded, so please don't trade off of this if you're listening to the recording. And number two, I do tell people where to put their stops. I'm analyzing charts. It's not my personal opinion. I'm analyzing the charts, and there's an 84, what is my percentage now? 84.3% chance that I'm right. That's based on 5 years of documented analysis. My current running average is 84.3% accuracy. So what does that mean? 16.7% chance I'm wrong. Does that make sense? But that's pretty good odds, because you're not going to find any of those odds in Vegas. I'll tell you that right now. So if we are analyzing a stock, you have to put in your stops to protect against a 16.3% inaccuracy rate. Let's go that way. Okay. Now let's look at TRV. Richard says TRV is in a major trend. Okay, Richard, you don't have your position, but let's look at TRV. We have puts in this, by the way. We hold puts. And in the last expiration week report for those option traders, you'll know that I drew these fan lines. These fan lines represent the break points and target levels for where I thought the stock would go. And basically what I said in the options expiration week alert was that if it broke through this fan line, we would most likely drop to this fan line. And we did. But now what's happening is we are seeing a bearish pattern in the form of a big red candle here on higher volume on Friday. This is a small little pattern. So what we have to watch out for, and I think this will happen, I think that the stock will break down below this fan line. I think that's what the forecast is going to look at. So as a result of that, I am holding on to our put position. And by the way, we're using the profits from other trades to pay for these puts and lessen the potential loss on that one. Looking at a weekly chart, look at that. This is on a major trend line right here. Major trend line. And we have right now in the weekly chart, we have a red candle. So if we break below this major trend line, watch out below, because now I'll go to the monthly chart. You can see why this is such an extreme upward trend. We break down below that trend line, watch out below. This thing could drop to 75 very quickly. We could easily drop 50% of this previous up move, easily. And I'm being conservative when I say that. Okay, I'm watching for more stock symbols. Who wants to put that in? Okay, Dylan says on Baidu, wow, I just looked at the clock. Can you believe it? We still have 12 minutes. I could get a lot done, but the time is really flying. Okay, Dylan is short on Baidu. Let's on bearish engulfing. Let's see, BIDU. Baidu. Now that's the monthly chart. Let's go to a daily chart first. Isn't that interesting? Wow. Can anyone tell me what this vertical line means? Some of you who subscribe to the reports know what that means. Can anyone tell me what that means? Who wants to answer that? All right, let's see. I'm looking for... thank you, Gene, for not knowing. I appreciate that. Sophie, June expiration date. That is exactly right. That was the expiration day for the June options. And look what happened. We do have a very long red candle. The only thing that is missing from that is higher volume. So it came very, very close to filling this gap. I'm going to mark that as a potential gap fill attempt. Now, for those of you who know gap trading, when a gap fills, what generally happens? Well, there's an 80% chance that the stock will drop. So this is what my forecast is for Baidu. I think that it could come back down at least this far, which doesn't look like much, but that could be a $4 drop to fill this gap. Okay? When I drew this line back here, we did pull back, and then it bounced off of this roll reversal. It did not continue down and test that support. It did roll reverse here, and we had a failed bearish engulfing pattern there. We have to be careful. Baidu is known to fill gaps. So let's see. What is, Dylan, what is your position? Do you have an idea of what options you have on that one? I wouldn't mind selling call spreads. You could do diagonal put spreads. You could buy debit put spreads as well. Okay, those are different things. Okay, Dylan, I'm looking for the answer. Okay, you don't have to disclose that. That's fine. I would be more bearish than bullish. Let's leave it at that. Okay, Charles, GE to buy. Now, please remember, what did we talk about? That's why I analyzed the general markets before we get into the stock analysis, because we want to know what's happening with the general markets, because GE participates like it's a mutual fund. Anyone tell me what this pattern is right here? Who wants to take a stab at that? That's a triangle pattern. That's right. That's a triangle pattern. We are at the top of the triangle line, and we are on much lower volume. Remember how the volume plays in. If you have a green candle on volume that is about 50% of what it was on Friday, that is not bullish. That is bearish. So if we're at the top triangle line, there's a good chance that GE is going to start to drop. So Charles, I would be very, very careful to wait until the stock breaks out over the upper triangle line. If it breaks out over the upper triangle line on high volume, then I would buy it. If it doesn't do that, I would not buy it. In fact, there's a good chance it's going to break down below the bottom triangle line to fill the gap down here. This is what I would bet on here. I would bet on this happening. The stock going down to fill the gap, and then a bounce there. I'm going to leave those lines in place as well. Okay? Stuart says, can you have a look at HUI? Stuart, I'll be more than happy to analyze your position if you have it. Look at HUI, the Dynamic Gold shares. I see the IAU gap down today, but look at this. This is the Amex Gold, the gold index. And it looks to me like we have a very, very strong level of support right down here. Don't worry about this. See that? Notice how, can anyone tell me why I didn't start my low here? Can anyone tell me? I want to give you a lesson on how to draw support and resistance. Can anyone, I'm waiting for an answer on that one. Can anyone know why I started this low and not this low? Okay, I'll give you a hint. Because I want to try to capture as many lows as possible. So here I caught a low, here's a low, here's a low, here's very close within pennies of a low, and here is a low from the bullish engulfing pattern. Now, there are gaps above the market. Let's get rid of this. I'll leave that there. What the heck? It's not going to hurt anybody. And there is a doji here. So I think this is what could happen. Now, there are cheaper ways to trade the gold, mind you, without having to spend $154 a share, because you can trade IAU. IAU is a fraction of GLD. And you can see that we gapped down today, and we're in the trading channel. So we want to wait for the volume to drop, and then I would say that IAU could go up to fill this gap and then this gap up here. So that's a cheaper way to trade what HIU is. So I would go with that one instead, and then HUI rather. I would go with IAU instead of HUI because you would get more bang for your buck. Okay, I'm going to keep going. Where is the other symbols? Oh, some of you have been washed away. I'm so sorry. Okay, Gil is waiting very patiently for me to analyze MD. Okay, Gil, here you go. What is this? I can't even make that out. Mednax Incorporated. Okay, here's what I'm going to do. I am going to go through a checklist of how I think when I'm looking at a stock, and if you like, you could jot down what I look at on the checklist. And then without giving my opinion, I am going to ask you, again, the audience, on what you think or where you think the stock is going to go. So I look at the trend, the short-term trend, as it relates to resistance. Now, first, I have to analyze the trend. Is the trend up? Yes, the trend is up. And I look at volume. So let's start. I look at trend as it relates to support or resistance. There's resistance. And I look at volume. Here's the hint. Boom. I'm not saying anything yet. Okay? Not saying anything. Then what I do is I look for support, especially role reversal support. I'm not asking you where I should draw it. I'm just going to draw it. And then you come to your own conclusions. Here we go. There is support. Now, if that's all I look at, we have enough information to make a decision. But I'm still going to look a little bit deeper. Now, once I've analyzed the short-term trend as it relates to support or resistance, comparing that to volume, I then look at the individual candle pattern. And I can tell whether or not it's a long candle or a short candle. I see that that's a short-bodied candle, very, very close to what I would see in a spinning top. Now, let's weigh the evidence. Draw your own conclusions. What would that be? Would you buy it? Would you sell it? Would you hold it? Who's going to answer? Go ahead. We have enough evidence to make a decision, and then I will see how your answer is. If you don't have it, okay, all right, I see. They're all coming in. Okay, let's assume that you have it. Let's assume that you own it. Nathan says, wait. I could agree with that. I would see why you would wait, because Nathan might wait to see if there's a pullback. Okay, let's go with that. Larry would buy a put. Well, guess what? I would go with that too, because I know I'm only going to lose a little bit if I buy the correct put. Gene says Gene would sell, Amalia would sell, Ann would sell, Rick would sell. Lloyd wouldn't buy. Sophie would hold it because price will likely go down, but it hasn't gone down yet. Gil says I should not have bought it. Gil, it's not too late. If it goes up a hair tomorrow and hits resistance right there, you can still sell it for a profit. But here's what I would do. If I owned it, I would sell at least half of it. How about that? If I owned it, I would sell half of it. If it pivoted lower on the next day, I would sell the rest of it based on the signals that I've come to in looking at the stock. If I was an option trader and didn't own it, I think I would buy a put. I would buy an in-the-money put somewhere out in a long-term month, and I would sit back and wait. I would just sit back and wait. And there's a very good chance that the stock will pull back to at least 72 or maybe lower. It might go all the way back. So I'm going to leave those lines in place. All of you, by the way, were right. I didn't see anyone that would have said, I'm going to go crazy and buy it, so that's good. And, you know, when we're looking at this analytically and we can count a checklist off and then weigh the evidence in the end, it'll most likely put the odds in our favor. And again, there's a 17 to 20% chance that we could be wrong. And what do? We prepare for that as though we were going to lose money. We just make sure we lose a very little bit. Folks, I'm telling you, I feel like I want to go another hour, but I have to stick to the schedule. We are now exactly at 9 o'clock, and I surely hope that you've enjoyed this session. This is recorded for the members who are subscription-based. You will get a copy of this recording so you can analyze the charts later on and compare them. And if you're not a subscriber, then I hope you took copious notes, because we had some really good candidates here this evening as well. So for now, I'm going to sign off. AJ Market Guy, Chief Analyst for the Market Guys. Have a great rest of the week. So long.